our guests on the show. We have Naresh Mirani, Kunal Bothra, as well as Andrew Holland joining us on the show. Andrew, let me begin by asking you, the date of the budget was out, July 23rd, but it doesn't seem so that it started any, fresh rally per se in the markets. Are you anticipating that pre-budget rally this time around, or do you think, the stocks have already run up quite a bit, the expectations have already been built up already?
I think it's the latter. I think the market had a great run after the election results and the initial kind of weakness. So that the banking and the IT stocks led the way. What I think could happen now is that the market might be held up, and we might just have a push higher towards the budget, with other sectors like FMCG, probably helping to kind of push the market higher. On the basis that there could be more kind of government spending to help the rural economy, and therefore that would have knock-on effects on other kind of areas as well, like affordable housing finance companies. So these are the sectors which could help the rally. Given that we've had a pretty strong run for two of the big sectors, which is IT and banking, in the very short run. So I wouldn't expect a big up move from here, but I think we could see a bit more of a rally towards the budget.
Andrew, the markets seem to be looking for areas which may not have done very well, provide comfort of non-performance, if I can call it, like consumer, but with sparks of green shoots, like we saw some in the quarter gone by. If you add a dash of budget tilt, there's a pretty trade sitting out there. Is that the kind of way people are looking at the consumer space?
Yeah, no, I think that's it. I think you've nailed it in terms of that's the trade. If any sectors kind of has a kind of the momentum kind of moving forward in terms of what expectations are moving towards in the budget, and more spending to get the rural economy going, and of course the monsoons are proving quite okay. So I think that would be the trade that you would look at. But on a more sustainable basis, I still like within that consumer basket is the beverage sector, because I think you're buying into the premiumization story, which will have many years to run. But I think all of the consumer stocks will probably have a run ahead of the budget.
What are your thoughts on power sector financiers? While the valuations of renewable financier like IREDA are questionable now after 6x returns in almost 6 months, but PFC, REC, that pocket has a very robust business model with not so stretched valuation. How are you playing this space, the power financiers?
We're kind of trading them more. We like the power sector overall because we do feel. And what you've said is that the government will continue to spend money. It's a global factor on renewables, and of course, given the power deficit that we have in India, we're going to see a lot more orders. We think, particularly on the wind side of the power order frames. So I think the power finance companies are going to have to be there to help, kind of get the financing going. So I think I would play more the longer term power companies. And probably kind of trade the financing companies.
Point taken. So that's a view as far as the power sector is concerned. But just wanted to highlight some of these gas plays. ONGC has been doing quite well for itself. Right now, it's sitting with a gain of 5%. And there's a further rally that has happened in the last few minutes. You also have GAIL, which has managed to see quite a bit of traction. So that stock is also sitting at the highest point of the trading session. And look at that sudden spike that has happened on GAIL as well. A sizable move. And in fact, even those gas ancillaries and users, and RCF, in fact, for that matter, which do use part of these gases and other stuff as their raw material and power, usage, etc. Those stocks have also managed to see quite a bit of rally. So RCF was up 7%. FACT is the other one that will come up for you on screen. So some of these fertilizer companies, which are part of the ecosystem, are also seeing quite a bit of rally. Kunal, from these four names that I talked about, GAIL, ONGC, RCF, FACT, which are the stocks or charts which are which are showing the maximum amount of strength?
So ONGC is something which we discussed in the morning. Also, I'd recommended a buy because my expectation was that the stock is coming out of almost like a 30-pointer consolidation. So 290 approximately was the breakout point for ONGC. It's done pretty well, climbed up another 15 points from those 290 levels, which means potentially another 15 points could be in the offing on the upside for ONGC. So that should take the stock towards 320-ish, on a shorter term basis. And out of the other names which you mentioned, FACT is also something which has come back into a breakout mode. So it's a very high beta stock, and I've seen the historical patterns where the stock moved up almost 50% to even 100% in a matter of few weeks when the momentum is exceptionally strong. And then when the stock gets into a correction phase, it's a very mild kind of a correction on a relative basis. So I think it's coming back into a breakout mode. Volumes coming back over the last couple of days. 1000 is a support being held on to broadly for FACT. So that's another name to look out for.
In fact, I want to also talk to you about power value chain for a moment beyond the financiers, Andrew, especially the power cable story. Up till now, the focus on the power cable side was real estate led or consumer kind of powers, RR cables and polycabs of the world. But now the word is that because of such a massive thrust on power generation, the high kVA power cable story could also come out. People are talking about underground cable policy of the government, and basically retrieving power from Ladakhs of the world, from renewable, and bring it to the consumer here. Do you have do you play the power cable story anyway in your portfolios?
No, we haven't actually, and I'd like to see the government wordings first before starting to take that kind of a view. So no, we haven't played the cable side of it.
Point taken. So those are some of the power cable companies. In the meantime, I also want to put the spotlight on what Nuvama is saying on CGD. So they are saying MGL will maintain a buy, hike target price to 1957. IGL as well, they've hiked the target price, and some of these stocks are reacting right now. Let's pull up MGL, IGL. They are at the highest point of the trading session. They're building in that Freedom 125 factor to the entire city gas distribution network, because they say that CNG total cost of ownership is going to be less, and the bike can add 5 to 13% to CNG volumes by 2030, and that's one of the reasons perhaps some of these stocks are buzzing around in the trading session. But apart from that, railway as a theme has been doing fairly well. I want to play a soundbite of the conversation we had with Mr. Vinayak Chatterjee earlier. He of course is one guy who's had a lot of consultations with the government, and he advises a lot of companies plus the government as to what the need of the infrastructure is, and he believes that this time around there's going to be a major push coming in for railways versus roads. Listen into that soundbite and we'll take forward the discussion with Andrew as well.
One of the big beneficiaries is going to be all the industries who are associated with providing goods and services to the energy sector. Obviously, steel and cement is a no-brainer because, they constitute the bulk of infra on the construction side. I personally feel that this year, there is going to be a higher emphasis on allocation to railways over historical roads. Roads for the last 2.5 decades has ruled the infrastructure roost by garnering the significant portion of the budgetary allocations. Roads have now reached a level of maturity. And I think the signals are coming through pretty clearly that railways might just overtake road in terms of allocations. Now, that has very serious positive implications for people who are involved in supplies of goods and services to the railway establishment. Not just electrification, but coaches, wagons, lines, safety equipment across the board. So I will highlight for you that, in my view, the sectors that are linked to electrical, green energy, and sectors that are linked to railways are likely to see a disproportionate increase in their business.
The word coming in from Vinayak Chatterjee that the area to watch out for would be railways, and disproportionate focus this budget could be on the railway space. Andrew, I'll come back to you in a minute. There's a very interesting story which my colleague Sharad brings in, that there could be a national common gold rate. Now, big HNIs and everybody, we all Indians have a fancy towards gold, but the prices actually vary on ground, state to state, supplier to supplier. Sharad, what do you carry?
Well, yes, sources to ET now have stated that there might be one nation, one rate for gold. And as per the sources, most of the big jewelers in the country across the bandwidth from east to west, north to south have actually agreed upon this. Now interestingly, GJC, which is the Gem & Jewellery Corporation, they have taken the opinion from all the big jewelers when it comes to the one nation, one rate for gold. Now most of them have agreed for a single rate going ahead across the country itself, and importantly there is a brainstorming is happening on the problems associated with this concept. Now it's likely that the announcement might be made in the September meeting itself, and there come and entire opinions are being actually formulated, especially on eliminating the challenges from this segment. Now what happens with this segment, which is called ONOR, basically one nation, one rate for gold. Now importantly, there's an increased transparency and fairness coming in, and more efficient markets will come up, and once the markets turn efficient, then the arbitrage opportunities also become less. Also a potential price reduction could be there, and interestingly there would be a level playing field when it comes to all the jewelers. So very interesting concept coming in when it comes to all the big jewelers and eventually the mid-side and the small side jewelers when it comes to the one nation, one rate for gold.
Okay, that's an interesting one. One nation, one rate. Definitely one can see the logic for that. Whether it happens or not is something we'll have to track. But time now to slip into a very short break. Don't go anywhere. We'll see you right on the other side in a matter of a couple of minutes.
If you like this video, then like, share and subscribe to ET Now.